Hi, I'm Jimmy. In this video, we're looking for dividend stocks. So the goal here is to find dividend stocks that could be good long-term buy and holds. Now, what we're looking for with these particular dividend stocks is we're looking for dividend stocks that pay reliable dividends and ideally dividend stocks that are trading out of value or trading less than their fair value, either using discounted cash flow, price to earnings, things like that. Okay, so let's jump right in. So this is the Investors Grow website. And if you want to sign up to get access to this website, I will leave a link in the description below. But I'm going to be using this website to give you a quick glimpse at these handful of dividend stocks. As you might be able to tell, our first dividend stock is Bernstein, ticker symbol AB. And then when we scroll down a bit here, well, we can see that Bernstein's up about 11% over the past year. So it's had decent performance over the past year. Okay, now let's jump in and look at their dividend history. So we jump over to our dividend section here, well, we can see that their dividends haven't been quite as steady as many of the other companies on this list. But at the current price, they are paying a dividend yield of about 8.5%. So if we're after decent dividends, this could be a good one to consider. Okay, now another thing that I noticed that I thought was interesting when I was looking through these companies trying to find a good one to research is that there have been far more insider buys than sells over the past year. Again, that's not the end-all, be-all of everything, but it is something to consider. Okay, now let's jump over and look at the fair value of Bernstein stock. So this is a chart of free cash flow. The dark blue numbers are historical numbers for free cash flow. The light blue numbers are computer calculations for free cash flow going out the next few years. And then after that, we just assume it grows with the broader economy at about 2.5%. So we can see here that looking at the history, the estimates here are fairly logical. That's the primary thing that I'm looking at when I'm looking at estimates. Do I think it's a reasonable number to assume going out the next couple of years? Okay, then when we scroll up and see what the actual fair value is, well, we can see that the fair value is significantly higher than the current stock price. And this is using discounted free cash flow. Okay, now to double check, let's jump over and look at their historical price to earnings multiple. So this is Bernstein's price to earnings multiple going back the past decade. And we can see that the current data point is less than the historical averages. So that implies that the stock is undervalued right now. Now, this is a financial company, and oftentimes with financial companies, price to book is a better valuation method to use. And we can see that when we mouse over this most recent data point, well, the stock's about fairly valued. So we got undervalued with discounted cash flow, undervalued with price to earnings, and about fairly valued with price to book. That's a lot of different ways to value a single stock. And considering this stock is currently paying at about an 8.5% dividend yield, this could be pretty good to consider for our investment portfolios. Okay, now let's jump over to our next dividend stock. Next up, we've got Cisco Systems, ticker symbol CSCO. And we can see that Cisco, over the past year, is actually down a decent amount. So we'll come back to this in a second. But let's jump over and look at their dividends. And we can see with their dividend history, well, their dividend history is far more, let's call it far more predictable than we saw with Bernstein. Although their dividend yield is not quite as high. Right now, they're paying about 3.5% dividend yield. Now, I haven't done a deep dive on Cisco in a long time, but I wanted to see if this company still had some reasonable growth. So we jump over to the financial section of the website, and then we jump into revenue. And then let's expand our time frame just a bit to 20 years. Well, now we can see on a 20-year basis, the company is growing at a relatively steady pace, which is frankly better than I thought. I thought they were going to be a bit more stagnant than that. So there is a little bit of growth. Okay, now let's jump over and look at a fair value estimate for Cisco stock. So this is a chart of their free cash flow. And the important bars are the green bars, which are analyst estimates. You can see we mouse over them. It tells us how many analysts are contributing to each number. So clearly we have a lot of analysts for Cisco. And then when we scroll up to the top of the page, well, we can see that the fair value estimate for Cisco stock is about $56. Stock's trading at about 45. So there's about a 20% margin of safety. And again, stock's paying a fairly reliable dividend. Okay, now let's jump over and look at our next dividend stock. So this is a utility. This is the ticker symbol's ETR. And we can see here that the stock over the past years doing better than the last one was. This one's up a bit more than 20%. Then we're going to jump over and look at the dividend history. And we can see over here on the dividend page, well, one, they pay a fairly reliable dividend, and it's yielding just short of 3%. So this is another one of those steady payers. Okay, now as far as fair value, when we scroll up, we can see this green warning here. This warning tells us that the best way to value a utility company is to use price to earnings multiple. So when we click on that green bar, that brings us over to the PE multiple page. And ultimately, we can see that, you can even see it here in the data table, that the PE multiple looks like it's undervalued right now. The stock's trading at about $117 per share, and the fair value is somewhere between $125 and $130 per share. Now, I've also seen price to book value used when trying to value utility companies. And we can see here, again, this is a 10-year chart, and we can see that the stock's about fairly valued when we're looking at price to book value. So depending on which valuation method you think is most appropriate, really tells us how undervalued this stock could be. But I can tell you, for a utility stock, it's generally not discounted free cash flow. Now, depending on how each of our individual portfolios is set up, perhaps we could use a company like ETR, Reliable Utility, or maybe an Alliance Bernstein, which, by the way, is going to be a bit more economically tied. And with the troubles in the market recently, they had a good pullback, brought them into the undervalued category. Or maybe if we're looking for something more in the technology sector, but less of the high-flying one, something like Cisco, which again pays a decent dividend, perhaps these are good investments to consider for our individual portfolios. So let me know what you think in the comments below. Let me know which dividend stock you think would be a better one or the best one out of all of them. Let me know what you think. And if you want to sign up to get access to the website, I will leave a link to that in the description below as well. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.